All right, all right, all right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Tuesday morning Inner Circle Live session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen. I hope everybody is doing well today. Hope everybody's week is off to an awesome start. And we're going to dive in. So, as always, let's turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. Give me 1 second. All right. So we are going to dive in. Take a look at these fundamentals. Take a look at the risk on, risk off appetite. Take a look at the calendar to see what we have happening today, tomorrow, and Thursday. And then we'll take a look at, we'll do a quick overview of the charts and where things are, what transpired over the past couple of days. It's been a fast moving week so far. So let's dive in and get to it. And so we'll hop over to Forex Factory. And that's where, I'm sorry, not Forex Factory, but Trade Economics. That's where we'll start. Drop me a 1 if you can hear me okay, and if you can see my charts. My audio's been acting really, really funny lately. So, all right, cool deal. So, I mean, not my chart, but my screen. So, we're going to start right here. Japanese yen hovers near 24-year low. Japanese yen stabilized around $134.6 per dollar after yen authorities warned of negative effects from sharp falls in currency. Although they refrained from commenting on the possibility of intervention in the foreign exchange market. However, the yen remained close to the 24-year lows amid growing monetary policy divergence between Japan and the United States. While the Bank of Japan is expected to maintain its low yield stimulatory policy aimed at supporting the economy, the U.S. Federal Reserve is expected to remain interest rates aggressively to combat surging inflation. The Bank of Japan decided in April to leave its key short-term interest rates unchanged at negative 1% or negative 0.1%, while guiding 10-year JGB yield to around zero. Instead, it would buy unlimited amounts of 10-year bonds to defend an implicit 0.25% yield cap every market day. So they're dead set on not changing. However, right, they said this last week, right? Talked about in the weekly ritual, $135 per dollar is the key level that they're looking at and they're watching, right? And they would have to step in. So we'll take a look at these yen crosses, the dollar yen, see where that is, and how things transpired yesterday at that level. But the interesting thing here is they're looking to see, because they're expecting the United States to raise interest rates aggressively to combat the surge of inflation. Okay, so it's a big piece there, right? Let's go back to the homepage, and WTI crude futures steady around 121 per barrel on Tuesday, as a still tight global oil market countered fears over a possible recession and potential new COVID curves in China that threatened to hit demand. Drop in Libyan oil exports amid a political unrest that has hit output and ports, exacerbated supply tightness at a time other OPEC producers are struggling to meet their output targets, and Russia is facing bans on its oil over the war in Ukraine. We continue to see pieces adding to this story, right? Adding to the oil embargo on Russia. Now producers aren't able to meet their output targets. Now Libya is having issues with their export, and they're having political unrest at the ports, right? On the other side, on the demand side, COVID outbreak at a bar in Beijing stokes fear of fresh lockdowns just as restrictions were being eased, right? So there's going to be an assessment that occurs in Beijing to see how bad this outbreak is or will be as we move through the next few days. So we'll continue to get updates on that. Investors are also seeing the impact of a possible recession on energy demand with elevated inflation readings likely to push the Federal Reserve rate hike this week. Investors are starting to price this into the market now, right? That article that Benny posted in the Facebook group talked about, right, the fears and the concern that investors have after the CPI data from last week, right, came in really, really hot. Meanwhile, markets are waiting a weekly U.S. inventory data from the API on Tuesday and EIA on Wednesday for clues on how tight crude and fuel supply remain. Right? So it's a lot of back and forth here with oil, but there are also some hints here in regards to what investors are looking at when it comes to interest rates and the potential increase moving from 50 basis points to 75, right? So that's that. And well, let's get there. Cryptocurrency meltdown. Bitcoin tumbled below 21,000 for the first time since December 2020 as investors continue to ditch their riskier assets amid lingering concerns about slowing economic growth. We'll take a look at Bitcoin. And Benny posted charts yesterday, but we've been talking about this for quite some time, right? Quite some time. We've been looking down, 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 down on the Bitcoin, right? Now, that's we'll stick there for now. Any questions from a article perspective as we move over to the calendar? No? Benny, good morning, bro.
Good morning, Ryan. Good morning, everybody. How are you, Ryan?
I'm doing well, man. How about yourself, though?
Doing great, huh? Risk off, eh?
Man. Big time. The Bears are definitely out to play. Definitely out to play.
Indeed, man. I mean, we saw the key technical levels too, right? So
came right in line.
Yeah, right in line. So check the fix if you have a chance, right? I'm guessing
we're
it's probably
slide
back
over
up.
there.
I'm guessing it's moving pretty high. I haven't had a chance to look at it yet this morning. So
it definitely is.
Yeah, sure.
It definitely is. You got any other thoughts on the fundamental side of things?
Oh no, man. Investors just bracing, continued recessionary fears. That's what's driving everything as they hike interest rates. We see bond yields across the board is through the roof, right? So that the 10-year up
3.4%.
Yeah, up about 3%. So long dollar, right? Which we're already long in a dollar.
Yep.
The longer the dollar. We talked yesterday. I haven't done much with the dollar yen, but that dollar CAD that we were in long already off the bottom, dollar Swissy. Haven't got much of a correction to add to any position or get in for initial trade if you were late on that. But long the dollar, fairly short commodity currencies, right?
Yep.
So
Yep. Cool deal, bro. Cool deal. So this Forex Factor, let's see what's happening here. Here we go. So Tuesday, producer price index, core producer price index coming in at 830 on the dollar, another inflationary data point. Continue to watch to see, right? Does this one also follow that CPI data and come in extremely hot, right? So we'll watch that. Tomorrow is the big day for the United States anyway. We got core retail sales coming in the morning, and retail sales at 8:30. Then at 2:00, we got FOMC economic projections, FOMC statement, and federal funds rate, and the press conference. Right between 2 and 2:30, everybody's keeping their eyes on this. Right. Can you guys hear me? Okay. My audio is going out. I apologize for that. Let me see. 1 second. Let me know if they keep happening, guys. I have been having some internet issues as well. So can you guys hear me okay right now?
Yep, I can hear you.
Okay. Yeah, it's better.
Yes, we can.
Okay, cool deal.
Hey, Ryan, can you set me up as a panelist again when you get a chance? I missed it.
Oh, okay, yep.
Thanks.
So we got FOMC federal funds rate statement and press conference coming in at 2:30 tomorrow. Then tomorrow night, we have the Australian dollar employment change and unemployment rates. And then on Thursday, we got more monetary policy information. So Swissy, right? Swiss National Bank, monetary policy assessment and policy rate. And their press conference coming at 3:30 Thursday morning. And we got at 7 a.m. Bank of England, right? Comes in with their monetary policy statement and official bank rate. Okay. Also Thursday night, the Bank of Japan has a monetary policy statement and policy rate coming out as well. So it'll be interesting to see how aggressive the Fed comes in, and then how the other central banks respond as well, right? Bank of England's been in a tough spot. They're trying to figure out how they'll move. Bank of Japan is pretty firm as of now, but we're sitting at that 135 level that they said was an important level for the Japanese yen. So it'll be interesting to see. And then on Friday, after the press conference of Bank of Japan, we got Fed Chair Powell speaking at 8:45, right? Be an interesting conversation to listen in on, right? To hear the words that are chosen as we move through. Okay. He's been continuing to get more aggressive with his word choice, initially saying that the landing would be relatively soft, then it could be a rough landing, then the landing is going to be bad, right? So we'll continue to monitor his word choice and see how things continue to move. But tomorrow is going to be key for the rest of the week. So that is that. Then, right, risk on, risk off appetite, right? VIXI sitting at 20.8, right? Up 13%. Risk off, right? We see it on the charts, but risk off, right? Investors are eyeing everything and paying attention, and bracing themselves for a more aggressive Fed and the potential of a recession. Okay. So we're pushing up. So any questions overall from a fundamental perspective? No? All right. So let's hop over. Let's take a quick overview of where we are. We'll start with the dollar. So in the last week, right? We closed. I was talking about the potential for this to press down, potential crown pattern here. It didn't happen. The bond yields increased. after the Bank of or the European Central Bank gave their statement, right? And it just pushed things through the roof. Broke this key level here, right? Weekly resistance level, and we just pushed through. Okay. Now we're looking at retracement, and now we're continuing to push to the upside, right? Next key level here at 12,954. Okay. So the dollar is pushing to the upside. We zoom out, just look at it from a more broader perspective. We're coming into previous highs, right? All-time highs, if I'm not mistaken. Nope, not yet, but previous high, right? 2020, right? And then we got an all-time high here at in 2002 at 13,000 on this scale. So we will see how this next level responds, right? The dollar's pushing up in a very, very, very strong way. Very strong way, right? Up. We'll see how the market responds here. Coming into tomorrow, we'll see if we get a press break through that level and continue to move to the upside as the Fed continues to make adjustments. Okay, so that's where we are. That's what the look is on the 4. If we run our fibs on this just to measure these moves. There we go. That's what we're looking like, right? Matching the extension off of a 38 to retracement, right? Just above this level, right? So that level is going to be key as we continue to press to the upside in favor of the dollar, okay? So we'll continue to monitor that and continue to monitor this move to the upside, okay? Any questions on the dollar index? No? Okay. Oil. This is look on oil from 1 hour perspective. It's that consolidation, right? Sitting around that 121 level, right? We're looking to break through that. We got a 50% retracement, matching the extension up here at 128.24, just below 130 in this next level of weekly resistance. And so oil continuing to press to the upside with these new advancements, and we'll see how the COVID situation plays. Nonetheless, oil still up, pressing to the upside as anticipated. Okay. Any questions here on oil?
Nope.
All right, cool deal. While we're on this side, we'll take a quick glance at Bitcoin, and then we'll take a look at these dollar crosses. But this is Bitcoin. It's what we anticipated, right? Been talking about this coming down, right, for a very long time. We're looking at this back in February, right? Watch for this key level, and then watch for price to fall off. Okay, coming into $20,000, we have the potential, right? We can even zoom out to a weekly time frame on this, right? There's potential for price to come down to this the $10,000 range, right? We broke through this last daily key level on our way down. We'll monitor again at 15,000, but eyes are on this $10,000 level. Eyes are on the $10,000 level, right? So we'll continue to monitor this, but Bitcoin is playing out as expected to the downside. Okay, so my recommendation is to be patient and allow this thing to continue to free fall. If you're looking to buy anything, I'd wait until this thing really bottoms out, right, and gives us a new low. Okay, so that is the Bitcoin. Any questions on Bitcoin? It's just down. Just down. Yeah, Ebony. Yeah. But the market moves in waves, and Benny identified this months ago, but cryptocurrency is moving similar to your tech sector, right? It's moving right in line with that. So it's not a hedge against inflation or a safe haven asset, but it's a riskier asset, right? So yeah, moving down. So we'll continue to monitor that. But that's Bitcoin. All right. Let's take a look at these dollar crosses. We'll start with the dollar yen. We'll come back to the dollar CAD. Dollar yen. So looked at this on Saturday. Benny gave us the insight on the Bank of Japan and how they're seeing things. Hey, we get to this 135 level, and we could be in for some change. Bank of Japan may step in. The United States is not willing to step in to assist or make any statements in regards to it. But 135 is a key level where we could see some things happen, right? We got there, 135 to 15, right? Right there. Okay. Now we're getting some consolidation, some sideways movement here on the daily time frame, right? So we're looking to see, right? The Bank of Japan is waiting to see what happens tomorrow with the dollar, because we could see we're in risk off environment, right? We could see investors start to push their money into safe haven assets, right? Now that'll beg the question, is there anything that the Bank of Japan would have to do at that point, right? We'll see, right? But things are all falling in line with the statement that was made, right? And these key technical levels, right? So 135, 215 was the level. We just kissed it, got some indecision, and we got some more indecision as we wait on the conversation tomorrow. All right. So as we drop down through the time frames, that down to the 4, similar look, right? We see retracement occurred, and now we're pushing sideways. Okay. From a fib perspective, here on the 4, let's see. Continue to move through. There we go. All right, this is where we are. So we got a fresh AB boundary, right? The extension was hit here. Okay, fresh AB boundary. And then we got this press sideways, right? So as we start to layer our trend lines in, starting here, right? We move it to the outermost point as this is just sideways movement there. Okay, got to press up to that level. Beautiful evening star pattern, right? Decision, indecision, decision. Then we get a sideways push. Okay. So as you're being patient, if you're not in this yet, it's okay if you're not, right? Wait for a trend line break. All right. It's on a 4. Wait for a trend line break like this, right? Strong bearish candle, which we'll see how that PPI data comes out in a little bit, right? And then we might get a pullback, and then we look for a continuation to the downside, right? So we'll see how the data comes out, and we'll see what reaction the market gives. If that data comes out really, really hot like the CPI did, right, we could see, I do believe we could see this. It'll be interesting because this pair is back and forth so much in regards to the dollar and the yen. So we'll continue to monitor to see how the market responds to the data that comes out, and how the Bank of Japan also then responds from there. Okay, but that's your trend line. That's the sideways push that we're looking at there. Okay. Then, as we the one. 1 second, everybody. There we go. All right, so let's drop to the one. Make the slide adjust here. So there we go. All right. Here on the one, right? Run our fib to the top. Bang. Right. This is where we sit. We did get 38.2 retracement, but it's just been sideways, right? Just been sideways pushing. So we'll continue to monitor to see if we get that trend line break, right? Originally, your trend line would have come something like that. Yeah. Oh, no. No. Let's bring this back. As price was moving up, your trend line would have come here like this. You would have had an inner trend line running from here to the other side like that. Okay. That would have been your trend line break there, and price was pulling back. Okay. Price did push into this 118, 127 zone as it got to that 135 level, and then pressed down. Okay. So we'll continue to monitor to see if we get a break of this outer trend line. Okay. Yeah. So that's the dollar yen. That's the dollar yen. Any questions there? Waiting to see if we get another press to the downside. No. Okay, cool deal. Dollar CAD. All right.
So tomorrow's going to be interesting, right?
It will
because,
be, man.
Because they, the expectation is multiple 50 basis point hikes, but now the expectation is growing, starting to creep up there in regards to a possible 75 point,
right,
point hike. So it's going to be interesting to see, and I have to read more into it today to see exactly what the investor sentiment is, whether the number is going up or down in regards to 75 basis points. Because if you hike it, if the expectation gets so high around 75 basis points, and then you come through at 50, which is what's expected, what kind of effect would that have?
Yeah,
on the dollar? Because sometimes it gets to the point where it's actually can be seen as a disappointment, right? Because the expectation is building towards 75 basis points. So, it's something I'll definitely be closely watching tomorrow.
That's for sure.
To see what happens now with this pair, because it's ranging. They're both strong, right? You got the dollar strength because of everything, and then you've got the safe haven power of the yen. So you got to kind of push it sideways a bit. But this is a prime example with your inner trend line, where we're range bound a bit, but if you see how it's still kind of moving up against that trend line. So This is where we talk about the speed and the momentum of the market. So while you had strong momentum while price was above that trend line, now you can kind of see it's still creeping up a bit, but the momentum is slowing, so the trajectory changed, but it's still moving. And sometimes that's when you start to get that channel effect. So if you draw a trend line right across the bottom of that price action, you start to see how it just shifted, right? Like, it just kind of just shifted how it's moving in this upward trajectory, so the momentum shifted a bit because of the yen strength. So this will be an interesting one to watch.
Yeah, and I did read a couple articles. They mentioned in the article we're talking about oil, but there are a couple other articles that did say investors are starting to price in 75 basis points. So I follow you on the thought of potentially being a disappointment, right? If the Fed does come in at 50, and that could push these to the downside to give that retracement.
Yeah, because it's high. Bond yields are high ahead of that report tomorrow. So that's just one wrinkle, that can have an impact. Not sure, but that's something that I wouldn't be surprised if you saw the dollar correct if they came through at 50 basis points. If the expectations throughout the day continue to remain at 75 basis points, because it's all it's all on feel. It's all on sentiment, regardless of, and we know, when emotions are stirring, sometimes, you can't be emotional and rational at the same time. So sometimes we get that overreaction. It's like, yeah, it's still 50 basis points. You know what I mean? Like, but because of the emotions and the sentiment, you can see it correct. So even though we're getting a hike, we were expecting 75 basis points. So it's amazing how the emotions play out on the chart. So it's just something to pay close attention to tomorrow.
Yeah, for sure. How do you, with the PPI numbers coming out later today, do you think those could kind of set the tone or have an impact, have an early impact on how things shift? Preparing for tomorrow?
Absolutely. Absolutely. If the PPI come, right? Because we looked at everything from the consumer perspective, and now we look at it from the producer end. So it definitely can have an impact. So
sure,
we'll see. We'll see.
We shall see.
Yeah.
Cool deal, man. It's definitely going to be interesting to see how this moves for sure, and all of them for that matter. Right. So that is the dollar yen. Over to the dollar CAD. There we go. Pressing up, right? So this is a 1 hour look. Shallow retracement pushing to this 118, 127 zone, right? We got a key level here at 1.29636, right? So we'll see how the market plays in this zone. So we'll bounce back out and we'll look at it from a broader perspective. Then we'll come back to that 1 hour look, right? So overall, for quite some time, it's been range bound, right? We're pressing back up, trying to get to the highest point in this range, right? We broke through this daily level that we stayed below for quite some time. Push above. Now we got a stronger push and extension up, right? No retracement at all in sight yet, right? So coming into this monthly resistance level here, okay? Price pressing to the upside. So no fib there, right? So as we drop down to the 4, right, we'll get a little bit more detail here on where things are, okay? And this is that push again, right? You see no retracement in this, no retracement in this, right? So if you drop a fib here from the low, right, that's your AB boundary, shallow retracement. We're just pushing the extension outside this monthly resistance level, coming into these next weekly highs here. Okay, so we'll see if we get a response at this level, right? Was a key level, was support, was resistance. And as you come all the way back, right, was a key level of resistance here as well. So it'll be interesting to see how the market responds there as price continues to push to the upside. Okay. In this situation, even with oil continuing to move in an upward trajectory, the dollar, I think, is gonna weigh heavily here and kind of run this one to the upside, unless we get a retracement of some sort coming in soon. Okay, so that's a look to the upside there on the 4, right? And then as we drop back to the 1, this is the look, right? Shallow retracement push into the 118, 127 zone. We'll see how the market responds here at this 129, 636 level as well. Okay, so as the market is continuing to move to the upside, right, let's drop our trend lines in. And again, be patient, right? Because we know the dollar is raging. We know we're in a risk off environment, right? So let's drop our trend lines. And if we get a trend line break, right? If we get a trend line break, strong bearish move, right, with a swing high, could look at a potential retracement here, right? If that occurs, if we get a reaction at these higher levels, okay? So it's all if-then statements, all if-then statements. So we'll see how the market responds in this zone here, okay? Questions on this dollar CAD? Oh, okay. All right. Coming in the key level.
I think we're good.
Cool deal. Cool deal. coming in the key level. So we'll see. We'll see. And then dollar Swiss. Don't think I did a fresh markup on this one. Oh yeah, we did. Here we go. So, excuse me. So on the dollar Swiss, right? 1 hour perspective, we already got a turnover. Shallow retracement 118, 127 zone, broke above this daily level, but we turned back over and pressed down, right? Came back to the B boundary. And now we're getting a retracement off of that strong bearish push there. Okay. So that's the 1 hour look. So we drop back, clean this up. We'll drop back to the daily time frame. Give us that broader look. And this is what we're looking at, right? This has been that push off this low, right? Strong move to the upside, coming back to these highs, right? So now we haven't gotten that retracement yet, right? To, like Benny said, to be able to add to this trade, but been a beautiful move to the upside since we saw this shift in direction momentum here at these lows, right? So look at it from a Fibonacci perspective. Drop our fib on the daily here at the low, right? That's our AB boundary. We got a 38.2 retracement, right? And it's pressing to the upside. So we'll see if we get any sort of retracement that comes out of this, but we're sitting at a key daily level right now, right? Sitting at a key daily level right now, okay? So as we drop back down to the 4 and look at it here, okay? Had this consolidation, so we could, there we go. I'm gonna highlight this. All right, so this was our push to the upside. Price came back down, took out the A. So that shift to the downside like that. All right, so now this is where we sit. This is the active AB boundary here, shallow retracement 118, 127. This is that shift in direction momentum that we saw, right? And that push to the upside. So now we got a deep retracement sitting at key daily levels with some key data points coming in on the dollar tomorrow. So what'll be interesting to see is, right? Does the level hold? Do we get a push back up to this daily level? And then a retracement, right? Or does price just push right back through this level and continue pressing to the upside to take out the A? Okay, so that's going to be something key for us to watch there. If we run our sub fib to the upside from the low, here, right, we see we're overextended, right? Overextended off that fib. Our new fib would look like this, right? And this is what that 1 hour fib is going to look like. Push down to a 38.2 retracement there. Okay, have a deeper retracement on the one, but right, retracement. Now we're looking to see, do we get a pullback and a continuation down for a deeper retracement back to these levels, right? Or does this continue to press to the upside? Okay, so that's the question. That's the question. That's the question. All right. So let's pull these out. Let's drop back down to the 1 and give us that look to the upside. That's where we sit, right? Sitting at the B boundary. Sitting at the B boundary. Okay. So again, does this daily level hold as a level of resistance? It was support here, right? And then do we get continued pressure to the downside for a deeper retracement, or do we break through that and continue pushing to the upside? We'll see what the data gives us. Okay. We'll see what the data gives us. So in the meantime, again, trend lines, trend lines, trend lines to the upside. Now here, what I would do in this case, because we had price push right back into the zone, I would bring my trend line out here, right? Originally, it would have come up like this, right? Then you would have had an inner trend line, give you that trend line break there. But since we pressed back into that zone, I'm going to shift it all the way out to the outermost point and then look for like that. Like that. Okay. So that's what I'm looking at there. Okay. So we'll see how the market moves. Could give us a low and push higher again, and then we'd be able to have a better inner trend line here. This is really an aggressive one, but right, we'll continue to adjust this one as price consolidates if it does. Okay. But that's where we sit on the dollar Swiss, right? Do we get a retracement, or does the dollar continue to wreak havoc on everything? Okay. Any questions on the dollar Swiss?
Nope.
Nope. All right. Cool deal. Cool deal. That's a dollar Swiss. Now let's go over to Aussie dollar. All right. We talked about it. Pressing to the downside. We said we might get a retracement to come back, retest, but pressing down, right? Pressing down. Market opened and it just ran. Okay. Just ran. Sunday, press down. Monday, we're still pressing down. Okay. So off this daily fib, we did get, so we got two perspectives on this, right? This is the overall fib coming off of the swing low here, right? We're coming down to, right, the lows in the A boundary of this fib in this retracement to the downside, right? So we know risk off environment, definitely going to move against the Australian dollar, which is a commodity currency, right? Pressing in favor of the dollar. So we could definitely see this A on this daily time frame get taken out at some point, right? Pressing down to the downside. We'll see how the market responds at this weekly and these daily levels here, okay? But right now we're pressing down. So what I did, because this was a long drawn out move, right, I then ran my fibs from this high to the downside to give us these smaller waves here, right? So we did get just shy of a 618 retracement. So 50% retracement, then we turned over and we pressed down. Okay. So we're pressing to the downside here. Matching the extension is at this just below this daily level. Okay. Which is in line with, right, that A boundary. Okay. So if price presses down to get to the sub fib daily D extension, that A will get taken out. And then this will be our new set of fibs running to the downside anyway. Okay. So as you drop to the 4 to see what that looks like, here we are, right? Moving to the downside, okay? Got our trend lines running. We got D extension hit, overextended, right? Pressing down to this weekly and these daily levels, okay? So we're gonna keep our eyes on these key levels, right? To see how the market responds. This would be a swing low. So this would be our new AB boundary here. Look at that, right? Shallow retracement, 118, 127 zone comes in line with this weekly support level, right? We got a D extension that's in line with that daily sub fib D extension, right? Just below this daily support, right? So we'll watch these key levels to see, does price break through those to get to the D extension, right? And take out that capital fib A boundary, right? And then do we get a reversal from there, right? Or do we get a retracement off of this weekly level, right? This price press down to this 118, 127 zone, and then give us a retracement from there, right? So we'll keep our eyes peeled on these key levels as the market continues to move. Drop our trend line like so, all right? And we just wait on it. But it's been a strong move to the downside so far. All right, so keep your eyes on this. It's on a 4-hour time frame, right? But keep your eyes on these key levels as price pushes down, as we come into these news announcements later today and tomorrow. See if these levels hold, or does the Fed come in more aggressive and actually push this through these lower levels. Okay, so that's the 4-hour look. We drop to the 1, right? Similar deal. We got price to press down to this 118, 127 zone. Got a trend line break, but we press back down. Okay, so we got a new lower low. So we will shift our trend line to the outermost point, take all of that into account as we move down to stay in line with the lowest point as price is moving. So now, right, things are starting to line up. We got a 118, 127 zone on the 4-hour time frame in line with this weekly support. We got a 1-hour D extension just above this weekly support level, right? So again, this is going to be key. This is going to be key. Does this happen, right? Do we get that push? Or do we continue to press to the downside from there? Okay. So if then statements, if price gives us a rejection off this weekly support level and breaks a trend line, right? We got potential retracement happening on a 1-hour time frame and potentially the 4, right? Depending on how the Fed comes in tomorrow. If price pushes to the downside and continues to barrel through these levels, and if the Fed comes in extremely hawkish at the 75 basis points that some are anticipating, we can see this continue to stay in a free fall. Okay. Any questions on this Aussie dollar? No?
No, sir.
All right. All right. What time we got here? We'll do euro dollar, pound dollar, and then we'll take a look at these yen crosses as well. All right.
Hey, Ryan.
Yo.
When you go to the euro, the yen crosses, if you could, let's take a look at the New Zealand dollar versus the yen, just to show an example of that versus the dollar yen.
Yeah, for sure.
Okay.
I forgot to look at the New Zealand dollar as well, so I'll take a look at that too. Cool, dude. Yep, definitely do that, bro.
Thanks.
Yep. So look, so this is going to be interesting, right? So we'll go back to the weekly on this one, right? And we look, pressing down, okay? Pressing down. We already got a rejection off of this weekly support once. We got a pullback. Now we're coming back to it. So we want to see, does the level weekly, monthly, strong zone here, right? Really, really strong zone here. Okay, we broke through it, came back, retested, got a strong reaction, push to the upside, right? We got a reaction here. Now we want to see, do we get another or do we get a press down and break through as we make our way down to parity at $1, okay? So weekly levels are going to be key here. So as we get to the daily, right? We never got that 38 to retracement, okay? Never got that 38 to retracement, came back to the B boundary and then just fell off, right? Didn't get that push above. So does the level hold or does it get broken? That's the question. That's the question, okay? So as we go to the 4, we're starting to get price trying to turn around a little bit off of this move to the downside, right? So we'll see how that plays out. We got a 38 to retracement here on the 4-hour time frame. And then we got to break out of this consolidation and press down. Okay, so we'll continue to monitor this to see how things move from a trend line perspective. We'll drop these down like this. Okay, we'll run this down. It's really aggressive, but like that. Okay, so we did get a trend line break off the 4. Okay, we'll see. We could get price to press back down and give us another low down here, right? So we'll continue to be patient here and wait and see how this really responds as the session opens and as we get this data to come through. Okay, so as we drop down to the 1, this is what that looks like. Take the manual one out. We've already got a 61.8 retracement on the 1-hour time frame. Okay. Already got a trend line break, push up, nice retracement there. So do we get a press down back to these levels and get to this 1-hour D extension? That'll be the question, right? We'll see how the data comes out and see how it fares. Okay. But that was our trend line break right here. And then that was the move up. Okay. So we're waiting to see here how the market responds. Do we continue to get this press to the downside? Okay. Questions on the euro dollar? This was that move. No retracement. Press down.
Yeah, that 1 hour looks good for the short.
Yeah, it definitely does. Definitely looks good for the short, right? Even a star pattern here, decision, indecision, decision, right? So definitely looks good for the short. Definitely looks good for the short. All right. So pound dollar. Let's look at this, right? Again, right? No 38.2. Price got to this 236. We got a weekly level and a daily level here. Just turn over and press to the downside. Strong move. Looks like we're breaking through this weekly support level as well, right? Breaking through the weekly support level as well. So we could definitely be headed here, right? We got dollar news and then we got pound rate statement on Thursday, right? But we could definitely be headed to this D extension here on the daily time frame if we close below this weekly support. Okay. On the 4, what we look like, similar look, right? And we zoom in on this, right? We got a strong bearish candle happening right now. Okay. So we'll see if we get this close below this level in a strong bearish form. Okay. In a strong bearish form, if we get that close, we could be headed to the D extension there and the D extension on the daily time frame. We'll mark this out here. Okay. So that's how that comes in, right? So we'll see how things continue to respond there. All right. We can drop our trend lines on this move to the downside as we monitor and wait for these levels to get achieved and see if we get a reaction and a trend line break. Okay. Let's get to the 1. Here we sit, right? That was the original trend line. We got a 38.2 retracement. Price is pressing to the downside, right? Again, short. Short, right? Pressing down, right? Could likely get to this matching D extension here, right? Which is also in line with the 4-hour D extension and the daily D extension. Okay. So pressing to the downside, we'll see if we get a bearish close below that level. Okay. We shall see, right? But moving to the downside nonetheless. Okay. Questions on this pound dollar? Nope. All right. We'll deal. So we definitely want to be patient, right? And allow these fibs to play out and wait for it to give us a high price for shorts, right? Because overall, dollar strong, I am. So that's what I'm looking for is a high price, right? 618786 on one of the next fibs potentially, if we get a retracement to allow me the opportunity to get into this to the downside. Okay, so that's what I'm looking for really on all of these dollar crosses. All right, let's hop over to the New Zealand yen. Bang. Down. Right, so let's zoom out. Let's go back to the daily time frame. Let's look at it, right? I don't know what this line is, but I can't get it to go away. I have to reset everything. But price pushing to the push to the downside, right? Got a new swing high here. So the new daily level. Right there. Okay. So price came in, gave us a swing high, right? Previous level of resistance, right? Push down, push down. So look at it from a Fibonacci perspective. Bang. Okay. We did get a 50% retracement, but price wasn't able to break out to the upside. Now we're getting a press back to the downside, right? Press down after coming into a key level. Okay. So as we continue to move through, drop to the 4, right? And this pair is also used, right, as a risk on, risk off indicator because you got commodity currency and a safe haven currency, right? So this gives us that confirmation from the VIXI, right? Price pressing down in a strong way. Okay. So we did get 50% retracement here, price pressed up. Now we're pressing back down to the downside. Okay. So these are just sub fibs running off the top here, overextended, right? Looking to see if we get a retracement at any point. Okay. So that's the 4. As we move to the 1. As we move to the 1, look at this move to the downside here. Hold on 1 second, everybody. All right, my bad, everybody. All right, so drop the fib from the top to the bottom here. And this is where we sit, right? AB boundary, we got a 38 to retracement, right? And we're pressing to the downside, coming into, right? If we get to the matching B extension, we've got a daily level of support here that we want to watch to see if we get a reaction off of, okay? But down nonetheless. Benny, what are your thoughts here?
Just continuation short. Like you said, this is a pair everybody to really pay attention to, like Ryan said, as a risk on, risk off kind of indicator. Okay. Because you have a commodity currency in the New Zealand dollar versus the Japanese yen, which is kind of like the ultimate safe haven. You typically will look at this as a better gauge for risk sentiment, because if you look at that dollar yen, how it's just kind of moving sideways, right, and stalling a little bit, that's because the dollar can also act as a safe haven as well. So the dollar yen compared to the New Zealand yen is not as favorable to try to gauge risk sentiment overall as compared to the New Zealand yen because of that. So this is one that we always pay attention to, and it's also on the risk appetite from FX Street. They track it as well as a key data point to gauge risk sentiment. So you can see where this is making a clearly defined move to the downside bearish versus the yen, because if you look at the risk sentiment, how it's creeped up, I forget what you said, the percentage that has gone up today, but it's over 20.
Yeah, it's over 20. Is at 13, up 13%.
Up 13%. And you can see how this is a clearly defined move to the downside, right? This is clear compared to your dollar yen, where it's kind of right there. You go. So you put the overlay. What is that? The dollar
comparison?
Yen.
Yeah, this is dollar yen.
Perfect, man. So this is prime. Like, you guys see how that's clearly moving down. So this is why you would pay attention to this currency pair as a risk, a data point for risk sentiment, as opposed to your dollar yen, because of how, the dollar is the world's reserve currency. So it doesn't really give you a clear defined move like this New Zealand yen is giving you to the downside right now. So it is bearish. You've got yen strength because of the safe haven aspect, and the New Zealand dollar because it's a commodity currency. And we know risk on, risk off. Typically, your commodity currencies are not going to hold up as well. All right. So this is just another example of, I don't care what anybody tells you, fundamentals matter. And the more and more we're learning about why a lot of people say they just focus on the technicals, is just because they clearly don't, they just don't understand how fundamentals work. And they haven't taken, a lot of times what we're seeing is that they just haven't taken the time to learn it. And that doesn't benefit the people that they're teaching, not one bit, because it matters. Fundamentals help you to kind of gauge and get an understanding of where the chart should be moving before you even look at the charts. So if I wake up and I'm looking at indicators and I'm like, okay, we're risk off, I should automatically in my head start to think, those commodity currencies might be taking a hit. Oh, the bond yields are up. The dollar usually lags a little bit behind bond yields. Well, bond yields are over 3%, and we see that the dollar is a ridiculous bull right now. So you should start to put the pieces of the puzzle together before you even get to the technicals. And it really provides you a huge edge in the market, because then from that point, once you determine your direction based on that sentiment, it's just a matter of using the fibs and trying to get you an area to where you can enter on a particular position. So this is why we say don't short the fundamentals, guys. It's very, very important. It's a reason why people make a ton of money in this industry, provide newsletters and things like that are strictly fundamental based, because it matters. So everybody drop me a one in the chat. You guys are with me. Drop us a one in the chat if you understand what exactly what we're saying and how powerful fundamentals are.
And like,
cool.
We're still learning too, right? So one of the things that I wasn't the clearest on, right, is the bond yield piece, right? So as we were talking last week, I was looking at potential retracement, right? But I wasn't clear on the bond yields, right? So I had a long conversation with Benny about the impact of those, and I had to go back and do some additional research too, right? So it's a continual learning process, but you got to be willing to put in the time to identify areas that you're still missing pieces on, and be willing to dig into those, right? And have the conversations and watch the videos and read the articles to understand the impact of the different pieces, right? Yes, it's a lot. It takes time, but like Benny said, it's so key, so key.
Yep. And even, it can be a lot, but I don't know. I had to develop a passion for it, because it's amazing. Like when I'm at the office or I'm doing consulting work, or when I was just at my outside at my mailbox. So yesterday we found out, hey, our neighbors, guys, they're moving to Texas, and very, 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 very nice home. They put all types of money into their home, and they're putting their house on the market. So we stood there with my neighbors yesterday and had a half an hour conversation about interest rate increases and at what point we are in the market at a high point where we're right at that teetering edge where they're continuing to boost interest rates, right? Which is the foundation for mortgage rates and interest rates and things like that. So houses are going ridiculous right now, but you're starting to get to that point where they're hiking so aggressively, you're going to start to, some of your buyers in the market are going to step to the side here shortly. So we were just having a conversation like, hey, you guys are probably right on time. The house will probably sell in a week, but we are getting to that critical point where they are hiking so aggressively that they're trying to slow down spending, right? So you're getting to the point where people are going to start to say, maybe I'll wait because the interest rates are getting just a little bit too high and it's not optimal. Plus, the home prices are through the roof. And then my neighbor, Greg, was standing there talking about, I took a look at my stocks this morning, right? He was like, man, it's a bloodbath. So whether you're a trader or not, you want to pay attention because it affects your own personal economy.
Yeah.
So that's why I understand why people try to avoid it, because if you've never traded or if you never knew anything about trading, you're getting touched up right now. Whether it's at the grocery store, the gas pump, like you're getting pounded. So I have friends that avoid, the conversation about trading like it's the plague, but you probably should pay a little bit of attention to it because you're getting caught blindsided and you're looking at your bank account getting completely dismantled right now because of what's going on. So it's something that we should pay attention to regardless. That's just my opinion.
Yeah, definitely got to pay attention to it, right? And like you said, you develop the passion for the things that you dig into and you put the time into, right? I enjoy it now too. You know what I mean? And early on in my trading journey, I avoided this level of detail like the plague. Right? I wasn't looking into it. I wasn't trying to figure it out, right? But as we've grown and as we've continued to evolve, we, like Benny said, we see the importance, right? And you develop the passion for these things as you continue to grow. For sure. Joy 130 to fill up.
Yeah. I went in to fill up the other day. The guy said, I said 125 was like a little bit over a quarter. He said 125. What you need to fill up with 125? I said on pump 6. It's like, and they looking at me like I'm crazy. I'm like, it's $5 a gallon, right? But what y'all say, what y'all just said right now, like spoke truth to me, because I didn't realize once you talked about the bond yields and stuff like that, I'm gonna have to start me like a dictionary of the terms that you guys give, because sometimes I forget it because I'll be so focused on the technicals and trying to match it with the fundamentals so I can understand on my own. And it's like yesterday, all I did was start up this dictionary of words that y'all give, so then that way when y'all hear it, alarm can go off. Because I got caught up on GJ yesterday. I was mad. I didn't go back to my charts. Yeah, I got hit. But I'm cool on it because I know where I made the mistake. One, I didn't check my chart. Two, y'all gave us a warning the day before. Make sure that everything would the end. And I just was caught up and didn't get there. And I'm invested to go deeper and learn more, is what I'm saying. So then that way I want to be an investor. And it just, I'm sorry that I can't get my words together.
You okay?
I just, something came over me, and I've been trying to make a decision of what I want. And I want to take a big step out on life right now. And I mean, that's a big step, because I know with more time that I get, because I know I'm getting it right, and just with fine tuning, that it'll be okay. Y'all just spoke some truth to me, and I appreciate that. So I just wanted to let y'all know.
No, we appreciate you, Joy. That's major. That's major. It's major. We appreciate your transparency. It's huge. It's huge. And you'll continue to dig in, right? And like I say all the time, you'll start to see parts of your life in these charts, right? And you'll start to see different ways that you can really start to peel those layers back from yourself to really press in even further, right? So, hey, growth is an amazing thing. Growth is an amazing thing. We appreciate you, Joy. Team giving you love in the chat for sure. So look, we got to wrap it up here. Wasn't able to get through the other yen pairs, but this is a key one to look at, like Benny said, from risk on, risk off perspective. We'll continue to go through these yen crosses and continue to watch the sentiment and the data. Keep your eyes peeled for the PPI data that's going to come out here in a little bit, see how that impacts the market, and see if it moves these charts and gives us opportunities to and setups for coming into the rest of the week. So, Benny, any thoughts before we close out, bro?
No, sir. Great session. Great
Appreciate
session. See everybody this evening, 9 p.m. Eastern Standard Time.
Yes, sir. Right, 9 p.m. Eastern Standard Time with Benny. We'll continue to press in. We'll continue to monitor, adjust, and see what the market gives us. All right. Have a phenomenal day, everybody. We'll talk to you tonight. Peace.